Hello everyone. I welcome you all to Tech Mahindra's Q4 FY24 Results Digital Press Conference. We hope that you and your families are keeping safe. Before we begin, I would like to inform you all that there'll be an extended Q&A session at the end of the conference. Today we have with us on stage Tech Mahindra's CEO and Managing Director Mohit Joshi, Chief Financial Officer Rohit Anand. Without any further delay, over to you, Mohit.
Thank you, Abhilasha. So good evening to everyone. It's really a pleasure connecting with you again. In addition to the updates from the recent quarter and the financial year, Rohit and I will also share our 3-year strategy with you later today. We will touch on the actions that we've already taken to achieve our goals. But before we deep dive into our roadmap for FY27, we will brief you on Q4 and the FY24 performance. The earning highlights are as under. We reported a revenue of 1,548 million in the previous quarter, which is mostly in line with our expectations, as the one-off revenues in Q3 were not expected to recur. We will close the year with revenues of 6.277 million, which is a decline of 4.7% in constant currency basis as compared to the revenue in FY23. This revenue is mostly driven by declines in the communications vertical, while the non-communications vertical has remained stable year on year. We reported an operating margin of 7.4%. We reported an operating margin of 7.4% and free cash generation of $129 million in Q4 FY24. For the full year FY24, we have generated free cash of $676 million. We signed large deals with a TCV of 500 million in Q4, taking the total deal win TCV in FY24 to around 1.9 billion. This also includes the 2 large deals that we signed in Q4, each over 100 million in TCV. A couple of notable deals include our deal with a large telco and our longtime partner to transform their business processes across multiple service lines that include customer operations and experience, complex enterprise operations, back office and support operations through deployment of intelligent automation and new age customer experience technologies. Another deal with a European fintech major, which selected TechM to enhance their customer experience and provide global support from multilingual hubs while ensuring compliance with local regulations in each of the customer markets across Europe, America, and Australia, New Zealand. In terms of awards, as you know, our strength lies in the 145,000 plus strong workforce, and a testimony to that is that we have again been recognized as the best organization for women by ET Now. We have also been recognized as the ESG Champion of India 2024 Software and IT Services sector by Dun & Bradstreet. We are the only Indian IT company in the top 5% of the global sustainable companies, and we are a member of the S&P Yearbook 2024 for the 9th consecutive year. In terms of dividend, on a full year basis in FY24, and in line with our capital allocation policy, the board has recommended a final dividend of rupees 28 per share. This will bring the total dividend for FY24 to rupees 40 per share. FY25 outlook. As we step into FY25, we believe that this year will be better than the previous one. In a world of heightened geopolitical turmoil coupled with fast evolving AI capabilities, organizations will either have to address and adapt or defend and insulate their businesses like never before. They will thus turn to technology partners like TechM, who can help them transform at speed and bring agility, resilience, and efficiency to their businesses. I will now hand it over to Rohit to take you through the financial performance in more detail. Thank you.
Good evening, everyone. Let me now take you through the financial numbers for the quarter and the year in a little bit more detail. As Mohit mentioned, we ended the fourth quarter at a revenue of $1,548 million against last quarter of $1,573. Now, we'd highlighted last quarter that we had some one-time revenue in Europe that won't be repeatable, and hence the reduction, if you look at constant currency basis, is 80 basis point versus our anticipated view of 1.2, 1.3%. So it's better than that. In rupee terms, our revenue was 12,871 crores versus Q3 of 13,101 crore. From a sectoral perspective, if you look at Q4, our communication business on a constant currency basis declined 1.7%, and manufacturing, the decline was marginal, less than 1%, and BFSI business grew by 3.5%. When you look at large deal, as Mohit mentioned, we increased from last quarter of 381 million run rate to a 500 million deal quarter. This was due to a couple of large deals in more than 100 million of size, and the deal wins were across verticals or segments. In terms of EBIT, we reported $114 million of EBIT profit. In rupee terms, 946 crore. This was compared to last quarter, it was 84 million and 703 crores. And hence the margin rate we got for the quarter was 7.4%, which is an expansion of 200 basis points on a quarter-over-quarter basis. And we'd also mentioned last time that as part of our year-end process, we'll continue to look at all the portfolio companies for any impairment impact. So in the quarter, we've seen an impairment impact through that assessment of 37 million. At the same time, there's a consequent increase in other income or miscellaneous income, which is a reversal of earn-out that we typically keep as deferred payments for these portfolio companies, and hence that reversal in line with the impairment charges has a negligible impact on the P&L. The effective tax rate for the quarter is 30.7%, which was driven by some one-time impact we got. But when we look at the year, our tax rate is more aligned to what we had said at 25.7%. Our net profit after the tax rate is 79 million for the quarter, which in rupee terms is 661 crore, which is at a PAT margin rate of 5.1%. This is an increase of 120 basis points on a quarter-on-quarter basis. Free cash flow, as Mohit mentioned, we had 129 million of free cash flow for the quarter, and our DSO went down to 92 days, resulting out of the good cash collection that we had in the quarter. Just talking about the hedge book, as you know, we follow a hedge policy, and we have a hedge book of 2.4 billion quarter ending March against a 2.3 billion quarter ending December. Basis the mark-to-market accounting policy, we had 23 million gain because of the revaluation of these hedges, out of which 7 million is taken to the P&L, and the residual 16 million is taken to balance sheet as future reserves. Our cash and cash equivalent was very healthy at 949 million ending March, which was an increase on a year-on-year basis, where we were close to 900 million the last year. Moving to a full year performance, we ended the year at $6,277 million, which is a constant currency decline of 4.7%. In rupee terms, it's 520 billion rupees with a decline of 2.4%. When you look at it from a sectoral perspective or vertical perspective, our communication business declined year on year by 12.4%, driven by the macro trends and some one-time revenue we saw last year. But on the other side, on key verticals, manufacturing and technology both grew year on year, respectively at 7.3% and 1%. In terms of large deal TCV wins for the year, we aggregated at 1.9 billion, which was an increase as we moved towards the fourth quarter. And some of it is driven by some conscious decision we've taken to selectively look at deals as we move forward, which aligns with our portfolio strategy. We ended the year with an EBITDA of 599 million and a EBITDA margin of 9.6%. The EBIT for the full year was 380 million, and the EBIT margin stood at 6.1%. The decline year-on-year basis is predominantly driven by the revenue pressure that we saw, some of the one-time client actions where they reduced their business as a part of alignment at their end. And then from our perspective, we took some actions on de-risking the portfolio, which resulted in a reduction in revenue. Free cash flow for the year was very healthy at 676 million. And as Mohit mentioned, the board has approved a final dividend of 28 rupees per share, which coupled with the interim dividend of 12 adds to a 40 rupee per share payout. Thank you. We'll now take it to Q&A. Abhilasha.
Thank you.
wanted to give this to you. Thank you, Mohit and Rohit. We will now conclude this stream for those who have joined us on social media. Thank you, everyone, for joining us.